Greetings, members one and all of the Salivation Nation. The World Gold Council says that Bitcoin is no replacement for gold. And let's take a look at that and analyze it a bit. Are they threatened by Bitcoin? Let's see. This article comes to us from ccn.com, and the Gold World Council blinks as the headline. And then it claims that Bitcoin is no replacement for gold. So let's take a look and see what the blinking is all about here. By CCN, gold may have a value of $7.8 trillion. You think about that sentence alone, $7.8 trillion, the value of all the gold in the world. But the American debt is over $22 trillion. Crazy, isn't it? All the gold in the world couldn't pay off the national debt at today's prices. But it's not happy about giving any of that up to Bitcoin, the latter of which has a market cap of $97.2 billion. A day after Grayscale unleashed its Drop Gold promotion, a TV commercial that garnered 100,000 viewers in less than 24 hours, the World Gold Council is clapping back. Gold's reputation as a store of value has gone pretty much uncontested for thousands of years until Bitcoin, which has earned the reputation as digital gold in addition to its use as a currency. And so basically, this sentence is basically saying that this TV commercial from the cryptocurrency, bullish, Grayscale. I don't really know what Grayscale is, but apparently they're saying that the World Gold Council is threatened by Bitcoin. So they've come out with a statement. And they've come out with a statement in the form of a tweet. And in the tweet it says that cryptocurrencies are no replacement for gold. The team at the World Gold Council probably didn't know what hit them when the phones most likely started ringing off the hook with calls from people wanting to learn more about digital gold called Bitcoin. And so there you got it. The World Gold Council didn't stop there, and they published a blog, which we're going to take a look at here in a moment, outlining the features differentiating the precious metal from cryptocurrencies. And they state that although cryptocurrencies and blockchain technology look promising as a whole, they clearly do not represent a substitute for gold, either in theory or in practice. So they're basically saying it's less volatile, it's greater liquidity, and a more established regulatory framework. Touché. Yet they acknowledge Bitcoin only has a 10-year history, while gold has been around 600 BC. Bitcoin's share of the store of value pie is only going to expand. Meanwhile, volatility remains a function of the extreme views surrounding the digital currency, both for its ascent and its demise. So here's a realized volatility of Bitcoin, gold, S&P 500, and the US dollar. We can see Bitcoin is there in the purple, way up crazy. LBMA gold price, very stable. S&P, more volatile. But the dollar index is the least stable and kind of at the bottom of the barrel there. But you can see how crazy Bitcoin has been over the last few years here. By acknowledging crypto as a competitor to gold, however, the council just revealed that it considers Bitcoin as a threat. Understandably so. Some of the crypto community believe that Bitcoin and gold can coexist. Actually, I agree with that. Nonetheless, Grayscale is hitting the council where it hurts with its Drop Gold campaign. And let's see. I'm not sure. See what this thing is here. Grayscale. And I've not seen where that commercial is, but it's something else there. But that's it there. So here is the blog from Gold Hug, and we often are asked about cryptocurrencies and whether they represent a potential replacement for gold, as well as that role in any Bitcoin should play in a portfolio. We've written on this topic in these papers, and about cryptocurrencies are no substitute for gold, and cryptocurrencies are not a safe haven. Although cryptocurrencies and blockchain technology look promising as a whole, they clearly do not represent a substitute for gold, either in theory or in practice. And here is their reasoning here that we talked about in the other article. It's less volatile, has a more liquid market, trades in an established regulatory framework, has a well understood role in an investment portfolio, has little overlap with cryptocurrencies on many sources of demand and supply, and is a safe haven asset. The volatility, cryptocurrency's extreme daily and intraday volatility disrupts its use as a medium of exchange and discourages strategic investments. Gold's volatility is slightly above the stock market as a whole, in line with most fiat currencies over time. And they show the same chart here. And gold trades 150 billion a day, dollars a day, nearly 100 times that of Bitcoin. Gold pricing is consistent across exchanges in all forms. Some Bitcoin futures market have closed due to lack of trading, and price discrepancies exist across exchanges. Physical gold can be bought for a small percentage above spot price, and purchasing gold via allocated physically backed gold ETFs can cost less than a basis point over spot. As an example, Bitcoin charges many percentage points. We've seen as high as 9%. I've noticed that on some of these exchanges too, via the process of bid-ask spreads and entering and exiting positions. The most liquid Bitcoin closed and exchange traded product currently trades 40% above its net asset value. That means that investors have to wait for a 40% appreciation before they can realize their investment's face value. Plus, cryptocurrencies are much more complex than gold, for sure, especially with the physical. Bitcoin is all electronic. Gold is obviously has electronic markets too, but in the end, it's the physical that we hold that cannot be corrupted. All right, then it goes on and talks about regulation. It says, we have seen how lack of regulation has led to multiple crypto exchange defaults and fraudulent activity, resulting in losses amounting to billions. The government could begin to regulate cryptocurrencies by directly or indirectly discouraging investors' ability to transact with them. Ultimately, gold trades in a widely authorized and regulated market with transparency. However, I do somewhat agree with that, or disagree with that, because there is many accusations that the gold market is being taken advantage of with manipulation and circumventing regulations. And then let's see, it's very interesting to talk about that. They hear them talk about demand. Gold demand is diverse, coming from jewelry, investment, technology, and central banks. Cryptocurrency demand is highly speculative or investment related, and there is little proof of its use as a medium of exchange. Gold has a track record dating back to 600 BC, whereas Bitcoin has only a 10-year track record. But in the age of technology and the advancements with blockchain and the technology, 10 years is actually a pretty long time. It's almost a metric that's hard to really balance out, because it is maturing, and I think it will mature, and I think it will be something to contend with. Supply, the stock of both Bitcoin and gold tends to grow in the low single digits. Both have finite amounts of supply. However, there's nothing to prevent an enhanced cryptocurrency from being launched, devaluing those already in existence. That's exactly right. And all the forks are the forking that's been going on is one example of that. And it talks about investment here, how gold is well understood investment tool in portfolios, as it has been a source of returns rivaling the stock market over the long term, protects against inflation, which really, to me, that takes away its investment characteristics. It's a portfolio diversifier. I agree with that. Used during downturns in the market, and it trades in a liquid market. But I don't see it as investment at all. I see it as that hedge, the ultimate hedge. Cryptocurrency performance is a different story. It's been remarkable over the long term, but hasn't seen massive haircuts during some periods and has failed during periods where it should have thrived. Cryptocurrency has failed as a hedge in late 2018 for sure, behaving like a risk asset, most definitely. Down on par with technology stocks, falling 55% in the fourth quarter. Gold was up 9% over the same period. Developed into highly volatile investment as timing is vital. Scarce liquidity and non-transparent pricing. And they do continue to acknowledge the innovation taking place in the cryptocurrency and blockchain spaces, and believe there will be a role for this technology in the future. However, it's clear that cryptocurrencies are not a replacement for gold, and gold should remain a component in all investment portfolios. And not only that, but here's another thing mentioned here, and that I'll just say is that I believe we're going to see these two worlds collide or come together and complement each other, really. We're already seeing digital versions of gold based off of blockchain technology, cryptocurrencies, gold-backed cryptocurrencies, silver-backed cryptocurrencies. And it's anybody's guess as to which one's going to take root and take hold. There are lots of things out there. You have to be careful with some of these ICOs out there, and go to your own risk as to which one's going to be good, which one's going to come out and prevail in the end. But there's really, you're going to see where that's going to come forth. But let's see here where this thing, where it continues to keep this thing going. Grayscale Managing Director Michael Sunishan was featured in an interview with Cheddar where he explained that Bitcoin's uncorrelated nature to other asset classes is a home run for investors seeking to diversify their portfolio. He points into a shift in wealth when we will see some $68 trillion passed down from baby boomers to the younger generations. The way that money is currently postured won't stay the same as it moves down to younger generations. We believe some portion of it will flow into digital currencies like Bitcoin. I agree with that. I think that's where the future is going. Digital currencies being the key aspect of it, using some sort of blockchain technology or hash graph or whatever it's going to be. Basically, it's an online ledger, and it's a cryptic ledger. The Drop Gold campaign was clearly struck a nerve with the World Gold Council, but gold isn't going anywhere. There's room for the digital version of gold, Bitcoin, and precious metals to coexist, both investor portfolios and on TV. And I've not seen this commercial. I have to kind of look that up later. But the thing is, basically, it's saying, Grayscale saying that, to drop gold and to continue with this. And I disagree with that notion. And I believe with those that believe they can coexist. In fact, not only will they coexist, but they will mesh in the future. And here's where they're similar. Here's where cryptocurrencies in general, Bitcoin maybe in particular, is similar to gold. They're very different properties, and I do believe that Bitcoin is a riskier asset. At this point, it is an investment for sure, but it is also a currency. It's one of the few cases where a currency can be both an investment potential and a currency, but they're both decentralized forms of money or currency in this case. I don't really see Bitcoin as money per se because it lacks some of the definitions of what true money is. Part of that being kind of intrinsic value and to some extent fungibility. But it's decentralized away from government in a way because of its lack of regulation. And really, physical gold itself is not regulated by any government. The trading thereof is to some extent, but that's been circumvented as well. But that is a big similarity with gold and Bitcoin and cryptocurrencies. And that is why they're seeing this sort of this threat the World Gold Council is saying, because we have seen over the last 5-6 years, especially with the rise of Bitcoin and cryptocurrencies in general, in that space, I've watched it happen right here in this community. A lot of people have abandoned gold and silver and moved more towards these assets. Now that those prices have subsided and even gone down, we saw this bull market. Well, people are coming back to gold and silver, and others are diversifying and holding both. And there's nothing wrong with holding both of those asset classes, digital or physical. And so that is part of what makes it, I think, interesting. But cryptocurrencies, I agree with the World Gold Council, and I agree just by the fundamentals, there are no replacement for gold. Nothing ever will replace gold or silver, in my opinion, as the ultimate store of wealth, no matter what happens, no matter how digitally we get, because I believe that in the end, and as people become wise to how things are, especially in this day and age of technology, the more sophisticated the platforms are from which we trade and exchange, the more sophisticated the attacks will be on that platform, whether it be blockchain, hash graph, or what have you. And no matter how many different types of cryptocurrency or altcoins that show up or out there, there's going to eventually become one or so that become mainstream. What will they be? How will they take place? What form will they be? I believe that gold will play a role, I think, in some of that. In fact, I believe that with this economic situation that we have nowadays, and the fact that we're overdue for recession, and the fact that we're going into massive amounts of debt, we very well may be seeing the revaluation of the dollar to where you will have the dollar mesh with both the blockchain or some sort of cryptic ledger and gold and silver. That very well could come to a point where we bring all those together. A fiat currency, a blockchain technology, cryptocurrency technology, along with assets like gold or silver as part of a rules-based monetary system. And it may not be a bad thing. We'll see how it all works out. An interesting concept to consider. Post your thoughts below about this and about gold being a replacement or not a replacement. What are your thoughts about that? I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.